So if it does sound, please follow the signs to the nearest fire exit and meet at the fire assembly point in Civic Square. Please can I ask that you use your microphone when addressing the meeting and that it is switched off when you're not using it, and that your mobile phones are turned to silent. This meeting will be broadcast live to the internet and will be capable of subsequent repeated viewing. By entering the Warspite room and during the course of the meeting, councillors are consenting to being filmed and to the use of these recordings for webcasting. So I'll move to the first item, which is apologies. Hannah, any received today?
Through you, Chair, we've had apologies from Councillor Finn and Councillor Nicholson's just had to step out, but will be joining the meeting shortly.
Excellent, thank you. Item 2, declarations of interest. Do any councillors have any declarations of interest in respect of items on today's agenda? Any declarations of interest? No? Okay. Item 3 is the minutes of the Audit and Governance meeting held on 16th of September. Are councillors happy to agree this as a true and accurate representation of the meeting? Excellent, thank you. Chair's urgent business. I don't believe I have any. Oh, apart from Ian, I think I was going to hand this over to you. This is an update from the letter we've been waiting for quite a while, which I'm sure committee will be quite happy to hear about.
Thank you, Chair, through you. Yes, just to confirm that we are now in a position where we can announce that the capitalisation direction has been approved by MHCLG. Thank you to all those fellow officers, etc., supporting this. We've navigated through, but it was just, as we owned, it was a matter of just finalising arrangements, and that has now been made public, and we have put out a press release today, but the actual capitalisation direction will be on the gov.uk website shortly.
Excellent, thank you very much for that. Sure, everyone will join me in agreeing this is very welcome news at long last. Item 5 then, this is the Interim External Auditor's Annual Report, which is in your supplement pack pages 1 to 64, and then Barry Morris from Grant Thornton is going to provide the introduction to this report. So Barry, over to you.
Thank you very much, Chair. I'm also joined by my colleague Dan Povey, who undertook the work. So I'm Barry Morris, I'm the key audit partner for the audit. We're pleased to present the interim auditor's annual report today. The reason why it's an interim is because we need to update it to include the outcome of the financial statements audit. That work is still underway, so a final version of this will come to the committee that's just been updated to include the financial statements element when that work is completed in the new year. Without further ado, I'll hand over to Dan to take you through the detail of the report, and then we'll both be happy to take any questions. Thank you, Chair.
Thank you, Chair. Good afternoon, members of the Audit and Governance Committee. Can you hear me okay? Yeah, brilliant, brilliant. So as Barry says, I led the value for money audit work for the council, and I'll be talking to the report that's on your supplementary papers. If I could ask you to turn to pages 7 and 8, please. That's the executive summary, which really sets out what our key findings are of the council's value for money arrangements. If I take each of the 3 core areas individually, for financial sustainability, we have identified significant weaknesses in arrangements and made what we call key recommendations. And these really reflect the significant financial challenges that the council is facing. The 3 areas that we have made recommendations about cover further developing and implementing the council's transformation plan in order to identify the savings that you need to balance the medium-term financial strategy and protect the level of reserves that you hold. The second is to focus really on reducing the annual dedicated school grant deficit, which is significant and is growing quite fast. And the third area is about delivering mitigating actions to manage cost and demand in social care with adults and children's services. All three of these areas are key challenges and are challenges that are becoming increasingly common in English local authorities, and we're reporting on weaknesses of this type and increasingly common. In terms of improving economy, efficiency and effectiveness, we've also identified a significant weakness there and raised one key recommendation. That's updated from last year and relates to the SEND improvement notice the council was issued with in 2023. So we've recognised the progress the council's making delivering that plan, the improvements that are being made, but we've made a recommendation really to continue to embed these arrangements with partners pending the lifting, hopefully, of that notice at a future inspection. Members will see we haven't raised any key recommendations or identified significant weaknesses for the governance arrangements. We've made improvement recommendations across all three areas of the VFM audit. These don't represent significant weaknesses, they're just opportunities to strengthen arrangements, and we've made them across a variety of areas, such as delivering the Armada Way action plan, which the council is also making good progress with, strengthening procurement oversight, contract management oversight, and continuing to strengthen performance management. Chair, they're probably the sort of key messages from the report. If I stop there, I can happily take any questions.
Excellent, thank you very much. So, members of the committee, does anyone have any questions on that? Mrs. Benny?
Yes, thank you. Thank you for the report. I suppose the bit for me is probably more about the response. So, because what's set out here seems sensible. I read it and thought, okay, yeah, that makes sense. But for me, then it's the council response more so as to, okay, we've identified these key recommendations. Actually, how are we going to handle this in terms of reserves? How are we going to build a transformation plan that's integrated? And I suppose those are the key bits for me. But what I will ask, if I may, is in amongst what you've seen, are there any gems of opportunity? Are there any strengths there that we should maybe ensure that we capitalise on to ensure, for example, the transformation plan is really well integrated? So I'm just interested to understand actually, if we focused on certain areas that you've looked at, would we make a bigger gain?
Yes, thank you for you, Chair. I think the key areas, I think, is really one of the things to focus on is developing a pipeline of savings that the council can use that will cover multi-years and will allow you to progressively address the budget gaps, which rise up to about £30 million over the period of the MTFS. And a couple of the key recommendations that we make, particularly the one about transformation and particularly the one about addressing cost and demand in social care, which are largely driving the council's financial position. They account for over 80% of the council's budget. I think in concentrating on transformation, savings and mitigating costs in there and really developing that multi-year pipeline of savings, that will allow you to grow your reserves, bolster them, maintain them at a financially sustainable level. And to me, the key thing to financial sustainability is really making sure that the cost of the services you deliver can be funded from the funding that's at your disposal without using reserves. So I think it comes down to multi-year savings, I think would be key.
Supplementary?
A supplementary, if I may. See, so when I read this, I felt like this was a warning across our bows, and that we need to collectively sit up and take notice. Because we've had a little warning, we've had a warning previously, and actually when I read this, I thought, actually, well, I'm getting rumblings about financial sustainability for the organisation, and actually there's quite a risk here within this. And what I didn't get a sense of is some longevity around plans and exactly what you've just said about a sense of a pipeline of things that we've got in hand. And I know that every public organisation is facing these challenges. You know, I'm facing this within our organisation and live well, so I totally understand it. But I did feel a sense of disquiet around this, and I do feel as an audit and governance committee that we should be taking absolute notice of this paper, and we should read the writing on the wall, because I think we have a good opportunity, if we can get everything aligned within the organisation, to deliver something great. If not, this could very quickly unravel and we could find ourselves with a bankrupt organisation. So that's a statement I'm going to make, because like I say, I really felt uncomfortable reading this.
Thank you. I've got a couple of people indicating to come in. So Ian first, and then I'll bring in Barry.
Through you, Chair. Thank you, Mrs. Benny, for your question, the following statement. I think what I would like to just say is that this report is written as at the year ended 24-25. So we are some 6 months later on, following the end of the year. There has been a lot of work, and you may or may not have seen out in the public domain as part of our, through Council and Intercity Council, the medium-term financial strategy that we've released that sets out the councillor's approach, which is a continuation of that approach, but it's increasing the pace and the focus in terms of how we deliver. And it's multi-layered. It is about a transformation programme, absolutely. That for me is those, we have our City Help and Support programme, that's about the medium to long term and ensuring we have that pipeline, and it's about ensuring that we're able to make those decisions around following the initiatives that aren't necessarily about the budget next year and delivering, but are about ensuring we are investing in those initiatives that will deliver over the mid to long term. On top of that, we have a multi-layered approach around service delivery and then, but more importantly, around enabling our organisation into next year, into the budget. And most critically is a real focus on adult social care, children's placements, the initiatives that are set out to deliver that we've worked on, my colleagues have worked on in those directorates last year, into this year, and continue to see the reported progress around savings initiatives into the year. So I appreciate the words escalating in terms of how this is positioned. I think it's, from me, just to set out that this work is ongoing. There is a lot of focus and effort across my CMT, my corporate management team, in terms of ensuring we have that transformation programme established and growing, and have the right resources behind that. And it is about those, as I say, those mid to longer term that sit behind what is that nearer term that is more a part of what we see happening every year. It's the pipeline delivery that is the critical part to address what is a significant demand across these areas.
Thank you. Barry?
Thank you. So again, through the chair, I think your observations, Ms. Benny, are absolutely spot on. This is a sort of shot across the bows. I think you said, or early warning shot. And I think we're not underplaying how much of a challenge this is. I think Ian is absolutely right. This is at a position and a point in time. But this is about taking that opportunity to make sure that you really identify and embed those transformation opportunities and the savings plans there. Now, it's little comfort to say that there are many authorities that are in a much worse position than you, and actually you'll find that in some of our reports we've actually gone the next step, which is issued a statutory recommendation, because we're significantly concerned around the approach that entities and local authorities are in. So you are right, there is a lot of programme of work that's underway. We are finding that many authorities are using reserves. Clearly that's a short-term measure. You can only use them once. Once they're gone, then you need to replenish those. So it is about having that pipeline of savings, as Dan pointed out. And Ian has said that this is the position. We'll be giving an updated commentary, obviously, in a year's time. But I think you're right that this is the warning shot.
Does anyone else have any further questions or comments on the interim annual report?
Yeah, a couple of questions. I just want to pick up on this point about it says in the executive summary Plymouth is in a similar position to many local authorities. I mean, what exactly does many local authorities mean? Because it sounds as though some are in much more desperate situations than Plymouth. Can either Mr. Povey or Mr. Norris help me with that?
Yes, so through the chair, I think I just echo what I've just said. So we are saying that a number of local authorities are in more significant challenging positions. We've seen an increasing number of authorities going to MHCLG for additional exceptional financial support to fund their day-to-day activities. And you'll have noticed from the press the number of entities that are issuing Section 114 notices saying that technically they've run out of money and therefore they need that additional support. So there's some which have gone as far as issuing the Section 114 notice. There's some that have preempted that by going to MHCLG early to ask for that exceptional financial support. And again, that's backed up by the further statutory reporting that we've done. So this is a moment in time for Plymouth that you're not at that position yet. But now is the time to take that action.
But you would accept, wouldn't you, that Plymouth's financial sustainability depends upon the resources that it has? I mean, for instance, the government is partway through, or is about to start a review of social care, and I mean, we don't know what the outcome of that will be, or the effect that will have on the future financial sustainability of the council. So I accept your point that it's a moment in time, but it's not necessarily more than that, is it?
Again, through the chair, you're right, and there are lots of things that are outside of the council's control in terms of the funding that's available. I think from our perspective, it's about looking at those things that are in the council's control. So how are you delivering statutory services in the most efficient and effective way? What can you learn from others, I think is a key element there as well. And again, I've referred to those that have gone for exceptional financial support or Section 114 notices where commissioners have come in. Actually, it may be worth the council looking to see what sort of arrangements those authorities are putting in place to see if there's anything you can learn from those to try and address that earlier. And then, of course, there's always the difficult subject around the discretionary services that you offer. And the key point there is what discretionary services do you offer and can you afford to continue those going forward? So that's the challenge, I think.
I mean, it's not just a review of social care that's coming down the track. There's a review of funding for special educational needs, and that's highlighted here in the executive summary. Clearly, we await what the government is going to announce in respect of that, but it's quite conceivable, isn't it, that will have a significant impact on the council's position in respect of its funding of special educational needs.
Absolutely. Again, so through the chair, the DSG is a significant concern. And again, one of the things that we've recognised within your report is we've sort of reached a bit of a tipping point with DSG and EHCP plans and the council's arrangements, or authorities' arrangements around those. What we are seeing in some authorities is they're not taking serious enough action or trying to address that. And that's where we've raised our recommendations to statutory recommendations. So we're not seeing that at the authority. But again, I think Ian would say you're a bit late to the party in a positive way as far as DSG is concerned. But this is a real area of growing concern. And we are starting to see many authorities where the level of DSG cumulative deficit is greater than their level of usable reserves. So technically, if the statutory override was to stop in a year or 2 years' time, many authorities would find themselves in a really challenging position. Of course, we're also aware that this is a national issue. We know that the County Council Network has written to the government formally saying that urgent action needs to be taken around this. But it's therefore looking at what is within the council's control around how you can manage the demand or how the throughput of those plans are being put in place to make sure that the arrangements and criteria are as buttoned down as carefully as they can be.
I mean, I accept that. I accept that, also in relation to the social care review, when it comes to special educational needs funding, nobody's quite clear what the government is going to announce or how that's going to affect individual local authorities' finances. But I mean, my broader point is the Plymouth City Council isn't an island that self-funds. It draws resources from the government or is allocated resources from the government. To what extent is the potential for those extra resources factored into your executive summary?
So we're looking at the arrangements that the authority has in place, and again, we've looked at the
You mean in terms of now?
yeah, in terms of now and the medium-term financial strategy. Dan, was there anything you wanted to bring into in relation to that question?
Yeah, thank you, Chair. Yeah, we've looked at the arrangements in place in 24-25. That's what's driven our assessment as it has to as the year of audit, and we've also tried to recognise and bring, cast the net up to date. We haven't tried to sort of anticipate what might be in either the fair funding review or the SEND reforms. I think we all eagerly await what the government's going to say about them. And as I say, I think we said, we're trying to focus on the areas that the council has got some gift with, in terms of cutting its own cloth accordingly, having a pipeline of savings, the type of services that are delivered or the type of transformation that can produce savings. I think, going forward and this time next year when we come to do the work, I think hopefully the council will also get multi-year finance settlements, which will help with financial planning, and that will allow a bit more of an assessment of the medium-term position with a little bit more certainty.
Thank you, Chair.
Just going to bring in Ian quickly.
Thank you. Through you, Chair. I think Dan's actually just covered the points I wanted to make. I think it's important in the context of that conversation is that there are many factors. Again, just to bring back, this was a 24-25 report. We are on the cusp of having that multi-year settlement, understanding what that proper planning window allows us to set out, understanding what those core resource flows will look like. As I said, and assurances, we are deeply into developing and establishing this mid to long term programme of change around the transformation. City Health and Sport, we have a dedicated programme manager. It's exceptionally important. It's well understood in the authority the need for that, not in isolation, alongside those critical issues to address. Some of those critical demands around children's placements, adult social care, homelessness, SEND. We do await those outcomes, and not to repeat, but it is all of this must be taken in the context. There's a lot happening in the wider context. The DSG, the government's white paper has been pushed back to the early in 2026 now, but we do eagerly await and clearly a national problem that does need to be addressed, and one that we would look to address through the various initiatives that are upcoming. So yes, this is a point in time. There is action ongoing, and there is also that sort of government understanding and explanation that we will be getting over as we step through the next month or two to help us clarify the position as we face it.
Thank you. I'm going to bring in Councillor Rainsford and then Mrs. Benny.
Thank you, Chair. And sort of following on from Councillor Cudahy talking about the implications of national policy changes, and the confidence we can have in terms of Plymouth going forward. I sat on a scrutiny board this week and we were looking at City Help and Sport, which is we as a council are looking at how we get away from short-term knee-jerk reactions, which are very often very expensive, into longer, medium-term, long-term solutions to things like the fact that independent special school placements have increased by 257%. Home to school transport, 132%. Those are huge cost impacts on the council taxpayer, on the council. So I would ask, because I need to have a question here, don't I, Chair? What weight Grant Thornton have given to the fact that the council is being very proactive and really seriously looking at making some long-term, medium-term, long-term savings, as well as improving services at the same time?
Shall I take that, Chair?
Yeah, if you're happy to. Thank you.
Sorry, thank you. So in the report, we do recognise what the council has got in train, and we recognise that transformation has started. At the moment, I think it's more developed in particular directorates, in children's and adults. But we recognise the importance of what's gathering ahead of steam in terms of, we've already said, the city help and support, and some of the enabling activity around data and use of AI and that sort of thing. So we have given weight to what's in the pipeline and what's happening. Our opinion has to be based on what was in place in 24-25, and that's why I think a lot of our recommendations are written in the sense of continuing to embed or develop or continuing to work with partners in recognition that some of the seeds of this stuff is going on, and it's a case of really getting up a good head of steam to identify the savings for the MTFS.
Thank you. I'm pleased to hear that the seeds have been recognised and they are growing.
Thank you. Mrs Benny? Excellent. So does
Apologies, Chair, can I
Councillor Cuddihy?
come back with something else? Just to Ian. The previous government were giving local authorities single-year settlements, and now the current government has changed that to a 3-year settlement. How much more helpful is that?
Policy statement will be out on Thursday. So I will reserve comments to understand how they will position that 3-year settlement. It, of course, in principle, is much easier to help with our planning as we look across a longer term view. So yeah, I see it only as a positive, and it helps my team engage, kind of across the organisation into understanding what that landscape looks like and take longer term decisions, particularly when we are launching initiatives like City Help and Support, which are about that mid to long term and having that confidence in ensuring that the only way you can get to that pipeline is by looking forward and working backwards, and that's what I think that will bring us. But the policy statement will be setting out the outcome of the fair funding review and give us a lot more clarity and understanding. So we'll report back on that afterwards. So.
Thank you. Does anyone have any further questions on this? Okay, we'll now move on to item 6. Ian's going to give us a verbal update on the external audit actions.
Thank you, Chair, through you. Yes, I thought I'd do a verbal update at this point, given where we are in the cycle of the external audit. So we have Grant Thornton on site at the moment, actually physically on site in a rare moment of non-hybrid working with us to carry out the year-end audit. The recommendations that we talked about at the last audit committee were in general were addressed. There were a number of in progress and more around our kind of non-current fixed asset type recommendations that were set out that we were looking to await the external audit. We felt we had put in place additional steps, and we will see the outcome of this audit and any further recommendations to steer if we have adequately addressed those. The report also touched upon the value for money recommendations, which we did recognise there were a number still open. I think we've just been covered off, and you've just had a far more extensive overview of where we are. A few have been retained, and the report that we've just been talking about have covered that and the explanation why. So I wasn't going to cover those again in this meeting unless there are any particular questions that needed to be raised.
Thank you, Ian. So any questions on that one? Mrs Benny?
Really, it would just help me for a refresh in terms of the assurance process for within the organisation, just to know that these things are being captured and where and how we're ensuring that things will happen, and if not, the risks are raised. Yeah, it's
Thank
really
you.
a reminder because I'm not in the organisation, so it would just help just for assurance.
Thank you, Ms. Benny, through you, Chair. They are covered and captured, very much sitting with my responsibility in terms of addressing these audit actions. As I said, we did a full, as a result of a number of years' accounts having to be taken through in the prior year. It was rather an extensive report and update that we gave last time, addressing each of the sets of recommendations that have been raised in the 3 audits, I think it was, that had recommendations raised. That's right. As I said, the ones that were left outstanding were around capital assets, land and buildings, and some of those initiatives that we were looking to close down as a result of as we went through this audit cycle to confirm the controls we had put in place. Right? So I don't think we left any of our financial audit recommendations open. I think what we've heard today is a narrative around some of the key steps we've taken around some of those value for money. So things like addressing the transformation programme. You talked about the work in the SE&D inspection and the management recommendations that you referred to, Mrs. Benny, around. We demonstrate in our feedback that all of those actions were in place and in train, and actually we have taken a lot of steps forward. So I think it's talked about. We report on them very much. This in the prior period, that external report that you saw as audit committee went to corporate management team as well. So we have ensured there's visibility across my colleagues as well. So, but yes, responsibility will sit with me, and we'll work with as we see the final audit outcome from this year and understand where any residual recommendations lie.
Any further questions on the external audit? Okay, so move on to item 7. This is the Counter Fraud Services report, and I think this is Tony and also Pete will be presenting this one. Over to you guys.
Thank you very much, Chair, and hello to the committee and officers. So yeah, this is an update report on the counter fraud activity, and on this occasion, again, I have my colleague Pete Burgoyne from the team. He's going to be talking you through some of the key points in that, and he's very involved in this work, so this is not only a good opportunity for him to get some experience of talking to yourselves and talking through what he does, but a general good experience all round. So thank you for supporting us in this, Chair and committee.
Hello. So this report sets out some of the work that we've already done this year and also what we feel like's on the horizon going forward. I'll pick out some of the key points in there. Firstly, in 5.3, so the National Fraud Initiative, which is a national data matching exercise, has now been completed, and as in they've done the data matches for us to now look through. We're currently working through the results from that. All the work is in hand, but we'll be given a full update on how that went in our end of year report. On to point 5.4, which is one of the big things that's come out from the NFI this year, which is a new strand of work, which they're calling career polygamy. This is people who are working for two places at once. This has seen a sharp increase, obviously, due to the increase in working from home. So we are looking at this going forward to make sure that Plymouth City Council are in the best position to make sure that it isn't happening, or when it is, that we have the correct resources in place to look at anything that might come through to us. Also, 5.7, they've just brought out a new set of data requirements for the National Fraud Initiative, which is residential care home and personal care data. We just wanted to pass on our thank you to the teams who provided that data really quickly to us. That's been sent off to the NFI now, and we are just awaiting them to send back the matches for us to check on that one as well. The final one I wanted to make note of was section 8.3, which is that the Economic Crime and Corporate Transparency Act 2023 has now come into effect, which is the failure to prevent fraud legislation. It's just to say that we've already updated the fraud policy for Plymouth City Council, but we will keep an eye on all policies and procedures to make sure that the council are in the best place going forward and that they're compliant with the requirements for good defences, and this will be done in line with the best practice guidance from CIPFA. That's all the main points I wanted to go through, but I'm happy to answer any questions if anyone has any.
Brilliant, thank you, Pete. Does anyone have any questions on this one? Councillor Rainsford?
Can I just seek clarification, because people watching this as well as myself, could you probably use it? Could you explain, please, how this double jeopardy type fraud works? I'm assuming that if you've got two people working for two different bodies, they will be paying tax to HMRC in two different places, and surely HMRC might pick up the fact that perhaps the amount wasn't correct.
So the matches that we've had have been done through the National Fraud Initiative, which is where all public bodies have to send certain data over to them, and that includes payroll data. So they found a lot of matches because ultimately a lot of people working for local authorities, if they're going to take a second job, are doing something very similar to that. At this time, we aren't receiving any specific referrals from the HMRC, but I'm sure it's something that they're going to be looking at going forward, because it seems to be something that's really on the rise. So obviously, if there's any opportunities for us to get involved with further referrals or data matching or anything like that, we'll always put ourselves forward to do that.
Yeah, I suspect some of it's fraud, but some of it's just people not knowing what they're supposed to be doing.
Yeah, and obviously there are some people who probably legitimately do have two jobs as well, and it's making sure we get those ones where actually they're being paid at the same time for the same place for the same thing, that we're making sure we're getting those cut out, but also making sure that the council have got the right policies in place to actually make sure that people can't do that as well.
Thank you for that's helpful.
Thank you. Any further questions? Thank you very much, Tony and Peter. And now move on to item 8, which is the internal audit half-year report for the current year and management tracking update. And Louise, I think, couldn't see for a moment, thank you. Over to you for this one, thanks.
Thank you, Chair. Good afternoon, everyone. Within your report back today, as the Chair just mentioned, you'll find the internal audit half-year report and the Q2 management action tracking update. These reports provide a comprehensive mid-year overview of internal audit activity and the Council's progress in implementing agreed management actions arising from limited assurance reports. The internal audit half-year report 25-26, which is on page 25 of your report pack, sets out the progress made against the approved internal audit plan and provides a mid-year assurance opinion on the adequacy and effectiveness of the Council's internal control framework. On page 27 of that report, you will find the mid-year assurance opinion issued by the Head of Internal Audit, which is of reasonable assurance, indicating that while systems of governance and control are generally sound, there are areas where improvements would further support the achievement of strategic objectives. Page 28 summarises our work as at the half-year point, with 59% of the audit plan work in either completion or progress. 76% of our finalised audits have resulted in reasonable or substantial assurance opinions. We also reflect on where we are with our audit plan and the work that we've got to come in the rest of the year. And this page also summarises that separate audits have been deferred to 26-27 due to ongoing strategic programmes, external reviews and capacity constraints, with readiness and risk alignment to be reassessed as we move into the audit planning for 26-27. Details of these changes you will find on page 28. We continue to work closely with management to ensure audit coverage remains aligned with organisational risks and priorities and that assurance is delivered in a timely and responsive manner. Full details of the progress against the internal audit plan, including audit status and assurance opinions, are set out in the table at Appendix 1, which is on page 30 of the report back. Moving on to the management action tracking update on page 53 of your report pack. This update tracks the implementation of management actions arising from the limited assurance audits previously reported on. As of the half-year point, there are 13 limited assurance audits with management actions that are yet to be fully implemented. Of the 108 actions agreed, 59 have now been implemented, while 49 remain outstanding. Of those that are outstanding, 11 actions are overdue by more than 90 days, and 4 of those are on hold due to system changes or resource constraints. There is an error just to note on the bottom of that table. It does actually say that 3 are on hold. It is actually 4, and that is actually detailed in the table itself. The table on page 55 of the report details the number of outstanding actions by audit area, with commentary on the status of overdue management actions provided by officers included in the table on page 57. This tracking process is essential to ensure that risks identified through audit are being effectively mitigated and the Council continues to strengthen its control environment. We will continue to work with management to progress the implementation of these actions and report back to committee. These reports support your oversight of internal audit delivery and the Council's governance arrangements. I'm happy to take any questions.
Okay, thank you, Louise. So, any questions from members of the committee? No? Mrs. Benny.
Thank you. It's thanks for the report. It's really helpful. I suppose the bit for me is around. I'm always interested in culture. What is it like in terms of the response you get, and whilst there's outstanding actions there, Is that something to be genuinely worried about, or is that is that broadly there? I'm interested to understand the scale of it. So sorry, there's two questions.
Thank you, through you, Chair. Yes, there's absolutely been a drive from the corporate management team to reflect on management actions and actually support officers to progress with those management actions. There has been a real drive to do that, which is appreciated from our side. But with regards to the actual management actions that are outstanding, quite often they can be quite difficult actions to complete, so they're not easy actions to address. So for example, there's a number of actions in there that are overdue and they're waiting for a big system implementation with regards to the Eclipse system. That doesn't happen overnight, and sometimes there's delays, there's different priorities that come on board, there's things that they come up against that actually, you know, for the right reasons, that they are making sure that the system is up to scratch before implementing it. So there's a number of reasons. I'm not overly concerned. There isn't anything in there that is to worry about, and we do reflect on this regularly, so we do go back and reflect on them. When the actions are taken, we do go back and do follow-up audits to ensure that they are working as expected. So overall, no, and we would highlight if there was any real concerns up through management and back to committee.
I'm just going to bring Ian in because Mrs. Benny and Louise talked about the Eclipse system, so there's going to be a little bit more information on this.
Thank you, Chair, through you. As action coming out from the previous audit committee, we said we'd bring an update around we talked about the overdue actions and those that were on hold as a result of the Eclipse system. We said we would bring an update into committee. I'm very pleased to say that Gareth has joined us today, who can provide a brief overview or answer any questions in relation to the Eclipse and timelines, just to assure the committee in terms of the steps that are being taken. Gareth, was there anything you wanted to raise just by way of intro or summary?
Yes, thank you, Ian. Yes, we're well aware that we have two major actions relating to children's social care finance overdue at the minute. The Eclipse project was started in 2021 to upgrade from our current Care First case management and payment and charging system. Phases 1 and 2, which was case management, were successfully implemented in 2022 and 2023. We are waiting to start phase 3, which is the upgrade of the finance and charging elements for adult social care and children's social care. We've been waiting for the manufacturer to fully develop the software we need and to make sure that there are other English councils ahead of us. Last month's Eclipse board signed off on the principle that we are ready to open negotiations with our manufacturer about the upgrade. We hope to place an order before the new year and start some point in the new financial year, to be determined with the manufacturer once we place the order. So we can only apologise for the delay, but these are very logical and considerable extensions of the Care First payment functionality into children's social care, which are best done on the new system with the new software.
Thank you for that, Gareth. That's very helpful. Does anyone have any comments or questions on this? No? Oh, Councillor Cunningham.
Yeah, just a couple of questions. First, in relation to Eclipse, one of the areas that's highlighted in the report as outstanding relates to shared costs between adult social care and the NHS. Do you anticipate that the Eclipse system will address those issues?
Some of them are system-based, some of them are process-based. In fact, the joint funding audit with the ICB, the majority were process-based. So around formally putting agreements around joint funding and setting down clearly the both the process and any dispute policies. So there is a policy element which will be picked up by Julia Brown, the new Director of Adult Social Care. I will be working with her on the system elements. We've already done, even before the audit, we've already done some actions with the existing Care First system for better reporting and better clarity on what is joint funded. And we've increased our reporting to the ICB to help with that. But yes, ultimately, once we're on Eclipse, we can finish that Eclipse finance, then we can finish off that full audit and use the increased functionality to show what is joint funded.
Thank you. The other question was within the report, and I'm not sure who might be able to deal with this, whether it's Louise or Gareth or someone else. but there's a passage in relation to cybersecurity in the audit report highlighting an outdated IT risk management policy and things of that kind. I just wondered if I could have an update in respect of that particular point. You know, the recent problems of Jaguar Land Rover are well discussed. You know, having a potentially significant impact on the wider economy, and it brings home the importance of cybersecurity.
I can certainly comment on the Eclipse and the Care First modules. Eclipse has been moved from a Delta server to a Google Cloud, so we are protected by Google. So as long as Google is still running Eclipse system, we'll still be running. One of the other reasons we are so keen to move off Care First is whilst Care First meets current cybersecurity standards, it meets the minimum standards, it is still an old system. And as it has all our effectively 240 million a year in payments and something like 20 odd million a year in income generation, it is one of our most vulnerable systems. So we are eager to move that into the cloud to be protected by Google, as well as our case management system. So from a social care perspective, it is one of the key reasons we want to move off the system. While it meets the basics, it is not at the top level of cybersecurity, and it is one of our key systems in the city.
Thank you. I'm just going to bring Ian in as well on there.
Thank you, Chair. Through you. The discussions at the last audit committee were around the cybersecurity risk, and to bring that back, that's coming back in January as a full update to the committee with the relevant officers able to attend. So apologies, I haven't got a further update here. I think what I wanted to say is we took cybersecurity into Scrutiny Management Board 2 cycles ago, so there's been and there is a considerable amount of work, as you will appreciate. You're right, Councillor Cudahy. It's not an area that you can sit idle in, given the ongoing challenges. So the team have progressed a lot of those actions. I think a more formal report will ensure the committee is fully appraised of all of that. And that, as I said, we've asked to come back in January.
Any further questions or comments? No, thank you, everyone. We'll now move on. We do have some recommendations on this one. So members of the Audit and Governance Committee are asked to consider and note, firstly, the assurance position presented within the report, including the progress towards the annual internal audit opinion. Secondly, the delivery of audit work against the approved plan, including any in-year adjustments. Also the scope, capacity, resourcing of the internal audit function to complete its planned work, the key audit findings and significant issues or themes arising from completed engagements, performance of the internal audit service, and finally the proposed in-year changes to the audit plan and whether these remain aligned to organisational risk and priorities. A committee happy to accept that? Thank you. So I'll now move on to item 9. This is the Q2 risk management update. And Ian, you're going to present the report, and we've also got Bradley Hutton here. Thank you.
Thank you, Chair. Actually, I'm going to hand over to Brad, who's going to actually introduce the report, given his engagement and involvement in it.
Thank you, Ian. Thank you, Chair, and good afternoon, committee. Yes, Brad Hutton from Devon Insurance Partnership. I work with Tony, Louise and Pete in the team and head up their risk management function. The council obviously uses already, as you've heard from colleagues today, internal audit and counter fraud, and just in the last few months, been working alongside Ian and the team to help along the way with risk management too. So we're on page 63 of your packs here today. Chair, it's a short paper today just to advise of the work that's already commenced and future work plans as well. So point 1, just by way of an introduction and why I guess STAP's experience was drafted in. Section 2 is risk identification. So we have been working alongside the senior leadership team to identify the strategic risks that the council faces. And we're pleased to detail these in the report. You'll see a list of 14 there with a brief description of what they are on their current risk score to the right-hand side as well. I won't go through them individually. There's quite a lot of detail there, but happy to answer any questions on those. And then lastly, just on section 3, their planned actions, you'll see that we've broken this work down into 3 key phases. At the time of writing this report, we were just entering the final stages of the first phase, and we're pleased to say that that's now concluded the first phase of the work, and we are now approaching the second phase of the work, so working with Ian to scope that out over the next few weeks. That's it from me, Chair. Hand back to Ian and yourself. Thank you.
Thank you. Ian, anything further at this point?
Thank you, Chair. Yeah, I think I just wanted to add, and thank you, Brad. It's been great to have the support of Devon Insurance Partnership. I think this was an exercise to kind of evolve, and I think I talked to the committee last time around evolving our language and relationship with risk to ensure that it set the tone as we go into those later phases then across the organisation around operational risk management and ensuring that people understand where those risks manifest in terms of a day-to-day delivery and how those align into the more strategic risks. Hopefully that, we've added the previous risk register in for traceability to an understanding. We've added a heat map to kind of give a visible queue, and hopefully that it is seen as an evolution of how, or maturity of the language used around risk to support the organisation. The only thing I have to say is it seems that the approach to circulating the risk register itself isn't conducive to people with eyesight, such as myself, and it is rather small font. So we will look as we had the comments in the Security Management Board to circulate it as an Excel as well, or a Word document to enable you to perhaps read it slightly easier. Thank you, Chair.
Thank you. So does anyone have any questions on the risk management update? No? Excellent. Thank you, Bradley. Thank you, Ian. And the recommendation is to note this report, which we'll do. Move now to item 10. This is the Treasury Management mid-year report for the current year. And Wendy and also Ollie, you're presenting this one. Wendy's going first.
Thank you, Chair. I'd like to introduce the agenda item 10 from page 85. The introduction of this report sets out the purpose of the report to comply with the SIPFA Code of Practice on Treasury Management, which requires the Council to report its performance on its Treasury Management function twice yearly. And this is the first mid-year report reviewing its TM activities through the first 6 months to the 30th of September 25, with and compares the Treasury Management strategy approved as part of the annual budget setting back in on the 24th of February. Point 2 sets out the external context of the economic background as provided by Arlene Close, the Council's Treasury Management advisors. Then moving into point 3, which is on page 91, and this is picking up on previous parts of the discussions around the SEND deficit. It sets out the sort of scale of the problem and highlights obviously the statutory override that we've been talking about and referencing, and the key thing with obviously with this is the impact on the Council's balance sheet and its requirement to borrow to finance that SEND deficit. And just to flag from a local context, we're currently working to a current forecast of the deficit reaching 54 million by the 31st of March 2026, which we're building into our forecast borrowing. So going over the page, on page 92, it sets out our balance sheet summary, the one that would have been presented as part of the Outtown report earlier this year, and a current forecast which obviously shows our net borrowing increasing. Again, this is to meet both the SEND deficit and also our cash flow supporting the capital programme for elements that aren't financed from external sources such as grants. Then taking you to page 93, and table 2 sets out our borrowing at the start of the year and where our position at the 30th of September 25. whilst there has been an increase in borrowing, there's we've also taken the opportunity to hold funds through the money market fund. So it's been a balance of trying to secure borrowing at favourable rates. So we've taken an opportunity early in the year to do that, secure the funds in our short-term money market funds to then be released at a later time when our existing borrowing arrangements mature. And one of the recommendations in our report is actually looking at our money market fund limits, and we're looking to increase them from the current 12 million per counterparty to 15 million, which is in line with when we've benchmarked the council's limits on investments in money market funds. It's benchmarked to its sit for nearest neighbours. Then taking you further on to the it talks about borrowing, picking up on table 3 on page 95 is highlighting with our borrowing strategy. We made part of the borrowing strategy in our treasury management strategy, we review LOBOs and any opportunity to where they're called in, we take advantage of that. And you can see from the table that decision was taken earlier this year to avoid the new proposed rates, which clearly was we were able to borrow at a more advantageous rate. Then taking it on to page 96 sets out our revenue position of our treasury management budget, and it's broadly showing a balanced forecast, noting that we have incurred additional borrowing costs by securing loan arrangements earlier in the year, but this has been mitigated by the extra income generated through its interest receivable, and has mitigated the interest rate risk going forward at the point where we need to actually repay our borrowing. Table 5 on page 98 sets out our net income from commercial investments, and this the commercial investments that were taken out at a point in time when they were allowed under the SIPFA rules amount to circa 230 million, and they're generating a return of a forecast return of 12 million. And the table sets out the percentage against our net revenue stream, which is our net revenue stream is our income from council tax, business rates and government grants. So then the next part of the report, which sort of starts from page 99, is looking at our prudential indicators, and I'll just draw attention to the prudential indicator on the top of page 101, which is under point 12.3, which again is linked to a recommendation, and this is where at the point that the targets were set, there was an anticipation that through the reduction of Bank of England rates, there would be a higher use of or a higher borrowing action taken with a variable interest rate exposure, which is through other local authorities. As a result of the interest rates not reducing as quickly as anticipated, and the importance of trying to secure borrowing over a longer period. So we've been particularly focusing in between 3 and 5 year period to secure the council's borrowing at a fixed rate for that period. We have exceeded it in our forecast for our combined forecast of where we've got borrowing, fixed term borrowing over 365 days, and with PWLB we can also borrow for just exactly 365 days. So it, from a day point of view, it just tips us over, but from a point of view of meeting our interest rate exposure, our recommendation is to increase our fixed rate target to a higher level, which will give us that flexibility to borrow at whatever borrowing rate is advantageous at the time of borrowing, which for the next sort of 3-4 months we have got our main part of our borrowing to do. And then finally, I'll go, like I say, there's other tables if there's any questions that want to come with them, but I also just want to highlight one of the most recent prudential indicators is the liability benchmark, and this is shown on page 103, and I felt it was sort of probably fair to show both benchmarks with the SEND deficit and without the SEND deficit, which I appreciate looking at this, and just to sort of explain, because the lines and the colours aren't helpful, so I'll pick that up in a future report to show that differently. But we're actually, with the SEND deficit, we're actually breaching our level that we are, not breaching it, but actually showing the deficit as our borrowing as higher than it ideally should be. But obviously, if we took the SEND deficit out, which is a sort of a unique transaction that we're not actually haven't been basing our borrowing on long term, the table below shows us within that line. Okay, so through you, Chair, the recommendations.
Thank you. Thank you. Ollie, did you want to do your bit now, or do questions first? Councillor Rainsford, I think you were the first to indicate.
Thank you, Chair. It's a little bit puzzling. The interest rate exposure, table 9, we've got two separate figures. It's borrowing over 365 days, and then it's mentioned below that things are typically secured over 364 days. What are the financial implications? What's the difference between the borrowing that one day can make in terms of?
Basically, that one day is the definition between fixed and variable. So in one respect, with our other local authorities, we borrow up to 364 days as a maximum, and though it will be a fixed rate for those 364 days, it's classified as variable because it's below a year for our defining it on interest rate exposure, and anything over, through the PWLV, the Public Works Loan Board, we can only borrow for a minimum of a year. And what we've done in the last, certainly in the last 12 months, we've borrowed for a year while we were waiting for rates to come down. It was the lowest point. And we also have, when we're coming to borrow, sometimes it isn't possible to borrow from other local authorities if it gets in the final quarter of the year. There's a lot of competition for borrowing short term, so we tend to go with the PWLB borrowing because it's guaranteed. It often is cheaper in that last quarter of the year. So it is only a definition of one day, but the between fixed and variable in this context. But it's just recognising that obviously if the focus on having fixed borrowing is that you've got that security, you know what you're borrowing, you know what your interest rate is, and that's sort of deemed obviously good. But it's also the benefit of having that balance with some variable rates, which allows you to secure where there's interest rates are going down to actually secure a cheaper rate. So it's just as an example, at the start of this year, we were borrowing at sort of 4.5%, and then in the latter part of the year, part of this report, we were borrowing at 4.25. So it being variable gives you that flexibility to secure it at a bit cheaper, but you haven't got the comfort of having it fixed in for a long period. So when it comes to repaying it in 12 months' time or 11 months' time, you've got the risk, the interest rate risk there.
I think just, thank you, Wendy. I think it's just that point that it's not where we think of variable and we think of mortgages, for example, where the rate changes. This is the the rates are fixed for the purpose of the indicator. If it's under a year, it gets classified for how we report it as a variable rate. So I think it's just being clear on, it's just that clarification as a point of, and Wendy's explained it all, I'm not going to repeat it all, and hopefully explain clearly for yourselves, but it's just being, you know, it's a different terminology I think we need to be careful of.
Councillor Nicholson.
Thank you, Chair, and apologies, I was a bit delayed at the beginning of the meeting. It's not really a matter for Wendy, and I appreciate Wendy's obviously given the report. And it's probably more political, so I might as well be frank. Obviously, the special educational needs and disabilities deficit of £54 million is a huge sum of money for the City of Plymouth. And to borrow to fund some revenue, a revenue requirement, is just not good practice, is it? And whilst the government have given us a dispensation, local authorities to do it, noting that situation is not, in my personal view as a councillor in this city, acceptable. We should be, as politicians, emphasising to the government that this is not a state of affairs that we want to be having to administer. We've got an impending budget. Obviously, this report's been signed off by Councillor Lowry, and he ought to really be, and I would suggest we should be recommending to Councillor Lowry that he further makes representations to the government in relation to the impending budget for early resolution. And, you know, well, I know it says in the report that we're expecting reform of the special educational needs, but that's not until 2026. Are they doing anything in year? Do you know, Councillor Allen, are the government doing anything or proposing to do anything for in-year spend to address this financial year, or are we having to cater for that situation?
I think you're correct, Councillor Nicholson, in that your question is political, but to actually deal with the issue that is in the report in front of us today, I'm just going to hand over to the Section 151 officer.
Thank you, Chair. Through you, thank you, Councillor Nicholson. I think it's important to note, and when the government launched the Fair Funding Review back in June, which they've been consulting over the summer, they also announced at that point that the DSG, the override on the deficit would be extended by 2 years, and that through either the announcements that are due to be coming out through policy statement, provisional settlement, but most importantly, the white paper in January will be addressing this national issue. So your comments are noted, and I think is very clearly understood that the government has said that this has been seen and will be addressed as well the announcements to come. Thanks. As far as the information we have to hand at the moment.
So do we know if it's actually going to sort of back fund the impact, or are we likely, as through the council tax and through our own borrowing and funding, having to fund it as a local authority? You know, these are issues that politicians should be standing up. But it doesn't appear, you know, I've not seen a great deal of noise from councillors in Plymouth in terms of raising this matter. Clearly it's a national matter, but there's a local dimension, isn't there? And do we know if this council's making representations, which no doubt would be supported by other local councils, that the government will refund the costs, of the spend, but also the borrowing costs?
Chair, I can't comment on the political positioning. I can comment though that the medium-term financial strategy that's recently been released and will be going to City Council calls out this again and clarifies the profile that we're looking at. As I said, Plymouth, to Barry's point earlier, was quite late or recent, whatever the right terminology is, into the deficit. We entered into this year with an £18 million deficit, forecast to be 54 million at the end of the year. So we are bringing it to life. We are now bringing into this type of reporting to demonstrate and call out what the impact has, and that obviously is briefed in. So as I say, I can't comment on the political point, but it is very clearly in those reports that are being brought to make sure this is clearly understood and the steps need to be taken.
Fine, thanks, Chair. Can I just ask Ian one further point then? So just in terms of the way that the City Council is handling it, we're expecting to fund ongoing costs of that debt. Are we making provision in the accounts that we will fund it, or as opposed to making an allowance that we will be refunded the money by government in due course?
We can't make allowance to be refunded because we don't know that will be the direction of travel. What we are trying to pull out of these reports is to demonstrate the impact that the DSG deficit will have, and that is what the purpose of having As Wendy commented on, the liability benchmark is an example at the back, showing the impact that deficit has in terms of where our kind of expected demand need for borrowing is. It has to be addressed through, and as we say, we await that white paper as a key way in which we will understand what steps we need to take to move forwards. But at the moment, all we can do is present the facts as we understand them, which is to show the impact it will have.
Thank you very much.
Any other members have any questions on this? Mrs. Benny.
Thank you. It's really a question for clarity and me just trying to understand really. So we had a conversation earlier with the external audit linked to use of reserves. Would that be built into this, or is this really about managing the money and the borrowing in this report? And where would I expect to see a mention of reserves if we were choosing to make provision to draw down reserves for balancing the books at the end of the year?
Okay, the actual provision, the focus on reserves tends to get reported through the medium-term financial strategy,
Brilliant.
which will get picked up certainly as we get closer to the 26-27 budget setting.
Brilliant. Okay, thank you. That's helpful.
Councillor Cuddihy and then Councillor Sproston.
A question for Wendy, please. Wendy, I can see that the report asks us to approve an increase in the upper limit on fixed rate borrowing from 80% up to 100%. And I can understand your rationale for, you were expecting to be able to borrow more at variable rates over the last 12 months, but that hasn't proved possible. What's your forward-looking analysis? Because just because there's been problems on the variable borrowing over the course of the last 12 months doesn't mean there's going to be problems over the next 12 months. It's a different period, isn't it? What's to rule out that there might be much better terms available on the variable market than there has been over the past year. So there isn't anything in relation to any changes to the amount of variable borrowing that we're being asked to approve or note as compared to the upper borrowing. So the fixed rate borrowing. So I'm just interested in your analysis going forward and what advice you're receiving.
Through you, Chair. Our approach now is bringing in a bigger emphasis. Now we've experienced the higher rates, and the advice that we're getting from Arlen Close, our Treasury Management advisors, our rates will be reducing. They won't be going down to the levels that we experienced before. And when we were at those levels, we did fix out borrowing for quite a long period that we could secure borrowing to protect the interest rates. So our approach now, and again, this is following guidance from our Treasury Management advisors, is to start fixing out some of our borrowing over a 3-5 year period. We will always, in a way, need, whilst we've got a rate swap arrangement, we will always need a little bit of variable borrowing, but with the focus on borrowing going forward and protecting the interest rate risk, which gives us almost a bit the same sort of security as we would get with a 3-year settlement that we're looking at for setting our budget, adding that bit of security to our interest rate that we can secure over 3-5 years is going to help support the budget sort of decisions going forward.
And I think obviously if we will take decisions on borrowing in the light of the best information available at the time. The request we're making of committee to endorse this increase in the limit is really to give flexibility in those decisions. We've found once or twice just recently that the limit probably hasn't allowed us to make the optimum decision for the council, and that's why we bring it forward. Of course, that doesn't mean to say that we're going to move to borrowing over 1 year exclusively. We will still have that option to borrow short term if that's the right thing to do.
Yeah, I mean that was kind of what my question was driving at. I mean, I entirely understand you're in the position of if you like, a homeowner whose fixed rate period, cheap fixed rate period is about to expire. Do they go for a variable rate? Do they go for a fixed rate? It's really difficult to predict what's coming down the track. But that was really what my question was driving at. You're asking for an increase in the ability to borrow at fixed rates, but you're not asking for an increased ability to borrow at variable rates. but it has to be within the sort of range of possibilities, doesn't it? That interest rates come down much faster than the advice that you're giving, which might make variable borrowing much more attractive. So that was why I was asking for that advice, and it sounds like it's quite cautious advice, but given the sums of money at stake, maybe that's the reason why.
In practice, what we've experienced this year, the actual difference in rate between variable and fixed, certainly at certain times of the year, at the start of the year, like a lot of the councils are sort of cash heavy because they've got their funding in, and they're willing, if they're a lending authority, they will be lending out. And then as you get further into the year, the actual borrowing rates are often higher through variable. But say we're just trying to give ourselves that little bit of flexibility just to protect if we need to take opportunity at fixed rates, and not to compromise the rates we've been borrowing at.
I see. So it's very much about the market that you're operating in.
Yeah.
Yeah, I understand. Thank you. That's really helpful.
Councillor Sproston.
Thank you. It seems like a very good idea, and something I think we should be going for. However, for me, it always gives me a little bit more caution when something seems a little obvious. For me, we talk about the changing markets and your need for flexibility. So I have a bit of a concern that given the changing and temperamental markets, if that we can actually get this through in order to get Plymouth the best deal as fast as possible without your standard due diligence of having to come to us, put the recommendations and everything like that. And this may be an absolutely kind of, no, that can't happen for all these reasons, but for my own learning, I wanted to ask, is there a degree, if we accept these kind of recommendations, if there was potentially like a window where you could actually look at some of these rates and then have that flexibility in order to go, right, now I think is the best time, rather than we have it here and we try and go through the process.
For you, Chair, I think what we have here is a series of prudential indicators that ensure that we can demonstrate how we have adhered to the strategy that's been set out. So, what's happened in this circumstance, and it's particularly challenging, and I hats off to Wendy and the team as they manage, as you say, a variable rate changing in rates. I think what we're seeing here, and the reason for the importance to raise that and to have this addressed in this forum, is to ensure that you are aware of how we are positioning those indicators so that we can always then report against them, and where we do deviate, as we have done in this case, we can explain the circumstances for it. So I think the team have the ability, and I think what we're putting in place is a framework that enable them to deliver the best outcomes given the market that we're facing, given the expectations. For me, always with this, the purpose of how I've interpreted the prudential indicators, this need to have an upper limit around variable is that kind of the upside opportunity of interest rate moving down. But what we are saying, which must be really understood, is that we do fix our rates, so there is no downside. We're not potentially risking the authority to kind of a refinancing or interest rate risk as a result. We have certainty. As Wendy said, we're looking to extend out in terms of that certainty over a slightly longer period, so looking at these, per our recommendations, sort of 3-year loans. And it's by doing that in light of where our budget targets are in terms of interest rate and fixing that the team will continue to monitor and track. So what we're asking is this, to ensure that we can kind of get that balance within the strategy where perhaps at the 80% it was set, didn't have the mind of where the market now is seeing itself. But I think it's important to have the benchmarks there, to come back to your question, so that we can then explain why, and then if it does deviate, we can come back and explain to the committee or council as the case may be in terms of how those indicators has fared.
Any further questions on this report? So thank you, Wendy and Ollie. We've got 4 recommendations here. I'm actually tempted to take them one by one because I think this is a really important report that's going to go to full council next week. So the first is to endorse the mid-year Treasury Management Report 25-26 to full council. Our committee happy to do that. Thank you. Recommendation 2 is to note the impact created by borrowing for the SEND deficit and liability benchmark exposure to high borrowing exceeding capital financing requirements. This is just a note. We're okay to do that. Thank you. Recommendation 3 is to note non-compliance with the Treasury Management Indicator for interest rate exposure through upper limit on fixed interest rate exposure, explained by paragraph 12.3 of the report, which I think we've asked quite a few questions on, so thank you for that. And finally, to endorse the following recommendations to full council. A, increase the upper limit for fixed interest rate exposure to 100%. B, increasing the counterparty limit from 12 million to 15 million for investment in money market funds. We're okay to endorse that recommendation to full council next week. Brilliant.
Can I move a further recommendation?
Go ahead, Councillor Nicholson.
So add a new recommendation that we ask Councillor Lowry to write to the Chancellor of the Exchequer seeking immediate additional resources for SEM provision within the 2025-26 financial year.
Councillor Rainsford, you need to...
Point of order, sorry. Would that question not be better targeted at the cabinet member in full council?
I was just going to consult with my democratic support colleagues because I think this is not an appropriate body for that. I think full council would be the place to either submit a motion or ask the appropriate cabinet member, but I'm just going...
If Councillor Nicholson's got a seconder, he could do that here, but equally you could move that recommendation at council.
Do I have a seconder for Councillor Nicholson's proposal?
Can I just check, what's the tidiest way to do this? Is it tidier to do it now? Am I being wrapped up in something political? Just need to check.
Yes.
Right, okay. So given that we are meant to be apolitical as an audit and governance committee, yeah, and there is the opportunity to raise this at the next step, it would seem prudent to do that given it's potentially political. Would that be fair and reasonable?
I think so, if the majority of committee agree with that. Okay, so Councillor Nicholson, my suggestion is that you put that to full council next week, either by way of a motion or a question to cabinet members.
No, it can't be a motion, Chair, because as the governance committee, we're out of time for motions, but I know your point.
Even if you considered it to be a motion of urgency?
I don't think there is such a thing.
So perhaps then it could be a question to the appropriate cabinet member at full council. I'm just anxious that, we're not seen to be...
I'm discharging as an elected member of this authority the ability to use the Constitution to move amendment, which it may be political in context, but actually the reality is it's affecting the finances of the general public who we're here to serve. Now, if Labour members don't want to support representations to the government, absolutely fine, that's your choice. But I used my opportunity as an independent member of this authority to give an option to write to. If you don't want to choose to do that, then so be it.
That's fair, but also we have an independent member here who made a very good point about the apolitical nature of this particular committee.
This shouldn't be a party political issue. This is a local government issue where all councillors should be united in putting a case to government that borrowing to fund in-year revenue to look after children with special education disability need is a disgrace. That's what this is about, and we should be united on it. If you don't want to support it, that's your prerogative. If you sort a seconder, nobody's prepared to second it, move on.
Okay, so the 4 recommendations that we have on the agenda today, are committee happy to recommend those as already agreed? So thank you for that. Next is item 11. This is the Capital Programme Financial Risk Management report. And Ollie, I believe you're presenting this one.
Thank you, Chair. So the briefing report is starts at page 107 of your pack. This was a report that Audit and Governance Committee have asked us to submit, so it's just for noting. I'm happy to take any questions on any aspect of the report. I would just highlight paragraph. So we've taken quite a high-level view of risk. We haven't got into the detail of individual projects. We're looking at the capital programme as a whole here, and how various risks are managed. The main areas of financial risk are set out in bullet points at paragraph 1.2 at the top of the briefing note on page 107. And the first four of those bullet points are really managed generally at individual project or programme level. And by programme in that sense, we have a number of programmes like our highways maintenance programme or our facilities management maintenance programme, which are run as subsets of a wider capital programme. The final three risks associated with financing of capital investment and the overall affordability of capital and financial governance and oversight of the programme as a whole, they are managed across the programme, not at individual project level generally, although there's some overlap and duplication between those headings. So the report talks about how we manage each of those risks in section 2 and section 3. I would probably just highlight a couple of points for the attention of the committee around areas where we're actively reviewing this at the moment. So firstly, on the overall affordability of the capital programme, paragraphs 3.2 onwards in that section outline how we have been doing some benchmarking recently in this area. We also note in the audit findings report that you considered under item 5 in your agenda today, there was an improvement recommendation made in this area. So we are looking at the overall affordability of the capital programme, given that benchmarking information, and a review of the capital programme is underway. That will be brought back here, I think, in January as part of the capital strategy report. So you'll get a chance to look at that again. The other area where there is ongoing work and review is on financial governance and oversight, where we have the ongoing work of the Armada Way independent learning review recommendations and a review of project and programme management arrangements that has been taken forward in the wake of the Armada Way independent learning review, which is looking to strengthen existing governance. We have a governance process for the capital programme that was agreed back in 2024 that we are reviewing at the moment, and the subcommittee of this group will be sort of cited on that as the review concludes and recommendations brought forward. That was all I wanted to highlight. I don't know if Ian, you've got anything to add, but we're happy to take questions on anything.
Thank you, Ollie. Does anyone have any questions or comments on this report? Mrs. Bennett?
Thank you. So this was really helpful to read. Thank you, Ollie. I suppose the bit for me was around, so we've got some good processes here that they're described. How effective are they? Because we've got the process here, but actually, does this mean that actually we contain and cover, so we don't have overruns? Or are there, are there areas within this that could be developed more, or are they all very effective? Because what we've got here is a description of processes, but not a series of outcomes. So I'm just interested to understand how well they work.
So I think invariably it varies from project to project in terms of how well the risk management processes work. I would also make the point that I think Plymouth is doing a lot of great work in regeneration, and we are doing a lot of maintenance work on the foreshore. We have a lot of historic assets, and that is inherently risky. So things like cost overruns and programme delays are a fact of managing an ambitious capital programme in that space. So you will get projects where you do everything that's reasonable to do at the outset of the project, but you discover something halfway through that you couldn't have known about, or you might have known about if you have spent an awful lot of money doing groundworks and investigation, but there was a decision that was perfectly reasonable that was taken not to do that at the time. I think within that context, generally speaking, the gateway processes are working really well. So the capital programme officer group has really very tight governance. Nothing gets past the accountants in Wendy's team in terms of approvals onto the programme, and that financial governance of approvals is working really well. I think there is some really good practice taking shape in larger projects around Reba stage gateways and things. I think the Civic Centre project, which I've been quite heavily involved in, is one I'm aware of, where there was really good processes. A very risky project, but it's being managed very tightly. But then there are always going to be projects where we can learn from, and we have a very, very varied programme. The Civic Centre is a huge project that's been managed with a number of specialist consultants in trade, but we've also got sort of projects of sub £200,000 or sub £100,000 where you take a more proportionate approach, and the processes are different. I think the work that's underway in the wake of the A Mile Away Learning Review will help strengthen things, because whilst we've got very tight governance framework at the moment, I think it can be a bit clunky, and it's quite difficult for projects to operate within sometimes. So we're just having a look at learning from that a year in. But overall, I think it's a well managed project and program, and certainly we've got many more examples of projects that are delivered well on time and without significant cost overruns than we have other projects where that does happen from time to time.
Thank you. Could I just ask a supplementary question? And that's around, it's two bits really. One around, do you tend to have set levels of contingency, or and then the other question was around the cost versus quality, stroke safety. In my head, I have quality and safety combined. How do you balance off within your discussions around containing costs, but ensuring that actually what you're delivering is of the right quality?
So on contingencies, yeah, absolutely, and contingencies will be part of a cost consultant's recommendation for a particular projects. So, a refurbishment project will have a higher on a very old building, or where there's groundworks in an area where there's unknown risks, will have a higher level of contingency priced in than a more straightforward project. On the kind of cost, quality and programme, that's the other dimension: cost, quality, time. I think safety with construction design management regulations now, and also things like the Building Safety Act coming in on design, is a non-negotiable part of project management. That's always of paramount importance, and it's very rare that any compromises will ever be made on safety. But in terms of quality, there are always going to be trade-offs between cost and quality, and value engineering exercises consider those in many projects, and particularly at the kind of early stages of project development and design.
Thank you. Thanks.
Any further questions? Councillor Nicholson.
Thank you, Chair. Thank you, Ollie. Just picking up on the point in paragraph 2.1 in relation to significant difficulty of assessing underlying asset condition in pre-construction phases, and I'll pick up on the city centre and the public realm works, because I think some of the justification for increased costs is the discovery of services, beneath the highway. The reason I ask is that you probably may not know, but in 1985, all that work, the pedestrianisation of the city centre was undertaken by local government of Devon County. Obviously, we're the city council, but records are kept. And what I wanted to know is, do you think, as a side issue, that we actually keep records appropriately? So when you take the civic centre, the council built the civic centre post-war. So when you're looking at services and method of construction and asbestos and all that, well, you might be looking at it in a funny face, Chair, but the reality is that we, the public, are funding probably poor record keeping in not being able to identify some of the issues that we then have cost overruns on. So generally, do you think we maintain records in a state that would actually de-risk some of these things if we were to hold and have the detailed technical information for some of the projects that the council and local government has actually been at the forefront, you know, over the generations? Because there's no way that we would have known for the first time that, you know, services in the pavement existed in New George Street. They would have known that when they did the pedestrianisation scheme in 1985. No doubt we might have an issue, as we've had in the Guildhall, about the condition of the electrical wiring. Well, lots of these things actually, with a decent survey, you would know before you commence a project, but we seem to learn on the job. And I'm hoping that, obviously, the report you've presented today, we will improve and those sorts of issues don't arise in the future.
So I think record keeping is a lot better now than it has been historically. So now a standard operating procedure of any sort of building construction project would be handover of full detailed design and build documents at the end of the project, and they're stored on proper asset management systems. That wasn't the case in the 80s, and it certainly wasn't the case in the 50s. So as we go further back, even though this council or its predecessors was involved in a lot of this work, the records simply weren't kept at the time. They weren't even developed at the time in some instances. So the industry has moved on, but when you go back into a building that was refurbished in the 1950s, you have to face those issues. There's a lot of work that goes on. I'm not really able to comment on specific projects because we don't get involved in that much detail in finance, but I know that there is a lot of work that goes on trying to research and establish what drawings exist, what records exist, not just within the council, but sort of local archives and things like that. In any big refurbishment project, that will be done as part of a feasibility. And then you're right, there is a certain amount that we can find out through condition surveys. I think practice in that area is improving significantly. The facilities management team are doing an awful lot of work to update our asset condition records right across their estate at the moment, but that will only go so far. I mean, something like wiring, you can assess the condition of, but what sits behind walls or underneath flooring or underneath paving is much more difficult sometimes and more costly to ascertain. I hope that helps answer the question.
Just one follow-up. So all the public realm works in the city centre. Do you know if we're now maintaining the records of the services beneath those pavements? So in 40 years' time, we actually do know next time is that what the asset management system will prove for future generations?
I know that in facilities management, the asset management system will maintain records of condition surveys that are being done. I'm not aware in highways of exactly what the procedures are, so that's probably a question better for the highways team. But I certainly imagine it's a lot better than it used to be.
Thank you very much.
Thank you. Councillor Rainsford.
Thank you. Just through you, Chair, on Councillor Nicholson's point. Clearly, it's not just the council. You've got every single utility putting things under the ground. And some of the work, certainly along the Marder Way and New George Street, the issues there were utility companies not doing the spec properly in the first place. And of course, once the concrete's on the top, you've got no way of knowing. The drawings may well suggest that they were 3 feet down, but actually they were sort of 6 inches from the surface. So there's a whole piece of work here that has to go on with everybody involved in digging up the ground, quite frankly, or any asset base to ensure we keep decent records.
To answer Councillor Rainsford, obviously we, as the Highway Authority, permit works to the highway. So there must be records on permits that are issued giving approval to be able to dig up the highway for a certain purpose. So, it's not inconceivable that we can have decent records kept, but unfortunately these things, the systems aren't always as good as they should be, and it just costs us all more money, doesn't it?
Does anyone have any further questions on this item? Thank you, and thank you, Ollie, for your report on this. And talking of major projects, we've now got the first report of the Armada Way Action Plan Subcommittee first meeting. I think, Jamie, you're going to do this today.
Thank you, Chair. So the report before you today is just to provide a brief update on the work of the Armada Way Independent Learning Review Subcommittee, which met on the 30th of October. The subcommittee received reports from officers on the 6 key areas, which were governance, project management, consultation and engagement, environmental regulations, employee wellbeing and training and development. The subcommittee were satisfied with the progress that were made to date, so this report today is just here for noting and to be mindful that the next Armada Way subcommittee is the 11th of December.
Thank you, Jamie. Any comments or questions on the first meeting? Brilliant. So now move on to item 13. This is the action log for noting. Does anyone have any comments on the actions log? No? So happy to note that one. And then finally, the work programme at item 14 of the agenda. Any comments or points to raise on this one? Councillor Rainsford?
Yeah, it's an inquiry really. We've got Plymouth Waterfront Partnership bid, which is going out for review and voting in the future. They will have a clear timescale. Would we normally invite the bid to this committee to explain what they're up to, or will they go somewhere else?
So through you, Chair, in my other role as the support for the Greater Scrutiny Committee, we are speaking to them about trying to find a slot at the Natural Infrastructure and Greater Scrutiny panel.
Any further queries or comments on this one? Brilliant. Delighted to say that concludes today's business. And thank you very much to everyone who's come along today and for your contributions and questions. And see you all in the new year.